Kenya Airways is not out of the woods yet. The company declared a loss of 4.7 billion shilling for the half year to the end of September, which included a 2 billion shillings line item related to its restructuring efforts.
And the loss after tax has reduced 60% from 12 billion last year, same time, to 4.8 billion Kenya shillings. From an environmental point of view, yield, which is how we measure the pricing in the market.
While this is still a dire situation, many investors are starting to see a silver lining in what has been a very dark set of clouds that have engulfed the airline for the last 18 months. Operating profit, which strips out one-time inflows and expenses, has gone into the black from last year's loss of 2.1 billion shillings to a positive number of 949 million shillings.
That our operating profit at 900 million is up 143 percentage points compared to last year, same time, when we made a operating loss of 2.2 billion.
The airline reported that its revenues in the first half decreased by 3.5% to 54.7 billion shillings compared to 56.7 billion shillings posted last year, despite a 2.2 million increase in passenger numbers. Cargo revenue dropped by 20.9% due to a reduction in the wide-body aircraft that the carrier operates.
Most of the drivers in cargo yield are not the export out of Kenya, but the imports into Africa, which are high yielding. But now with the depressed commodity prices, we're seeing even the cargo yields constricting. But I think the decline is not as much.
The airline seems to be well on its way to unwinding its disastrous hedging strategy, in which it lost 15 billion shillings last year.
Trained first aiders are also on standby.
In these latest numbers, that figure had come down to a gain of 1.5 billion shillings.
The full impact of the sale of the planes has...
Investors seem to have forgiven the airline its woes, having beat the company's shares up to a high this week of 7 shillings. There was some profit taken though, and the shares were trading at 6 shillings and 20 cents at the end of the day. This is part of the stocks rally of the past 3 weeks after the pilot strike was called off and Michael Joseph declared chair of the board. Exits Dennis Awori, enters Michael Joseph, and the management says the turnaround strategy is on course. Now tourism arrivals in Kenya is rebounding as we head into the holiday season, and Kenya Airways is confident that it will fly back into profitability. Hudheifa Aden, NTV Business, Nairobi.